Our guest joining us now, Kohei Matsui, Portfolio Manager of Asia ex Japan, long only equity at Sparx Asset Management, is joining us. Kohei, good morning. I hope I got your name right. You can correct me if I'm wrong. Welcome to
Correct.
Yeah, it's you're of course participating in this conference. Tell us what's your view on the market here.
Well, I think the central banks has been pumping money, and they are still doing to do so to combat the virus. And virus created a new demand, and we stay more home and buy goods to repair, for example, our home, instead of spending time in the public transportation. So that means there is a new demand, and unlike global financial crisis, there are bright spots like this. There is a new demand. So I believe global equity will remain resilient with ample liquidity and robust economy outlook.
Okay, Kohei, good morning and thanks for being with us on the channel. So there is ample liquidity in your opinion and resilience as well. What does all of this mean for the Indian market, which has been moving from strength to strength? Do you think the time now has come to sort of take a bit of a breather, book some profits out, or do you think that this is the market that will continue to run forward through the course of this calendar year?
Well, maybe there is some breath for the Indian market, but as you know, China is cracking down their own technology companies, while India is showing some solid fundamentals and showing recovering from the COVID variant. So there is a positive fundamentals we can expect from Indian corporates. And we are also seeing some M&A activities in the market where large companies are buying smaller companies, which create also accretive to the EPS for the Indian companies. So I believe in Indian market still shows some resilience going forward.
Okay, and just as you say that, we've got the latest COVID numbers. It's a good number. It's a Monday number, second straight day that total cases are below the 40,000 mark. Of course, the weekend, we discounted that as it being the bit of a weekend factor. But let's see, let's hope it stays this way. Kohei, so, what are you advising clients to do in India? What kind of stocks, what kind of companies, which sectors to back?
Well, I think what we believe is that the financial industry still show the positive earnings growth, recovering from the COVID. What I think what's important is that the sentiment and the direction of the recovery. Even in Japan, there is less COVID cases here. However, people have more reservation to going out and stop some kind of economic activities. While in India, we see strengths in this economic activities. So with ample liquidity and with ample capital reserves of the leading financial institutions they are well positioned in the difficult market too. So we are bullish on the financial institutions of respective financial industry.
Just coming back to the point you were making, Kohei, about the move in China, because of the crackdown that we're seeing by the Chinese regulators on various companies, especially big tech companies, do you think a lot of money will continue to move out of China and perhaps into markets like India? And has that been the case already?
I think that's been happening already. It's understandable that a lot of investors are waiting for, away from Chinese tech, and I think investors have low expectation on the growth of internet companies, while India and the rest of Asia still show some resilience in terms of technology companies outlook. So that the trend may continue going forward too.
Okay, my final question to you, Kohei. Right now, it's a global party, and you mentioned the liquidity, right? And even taper worries are now more or less behind us. Do you see any risk on the horizon that could spoil this party?
Well, liquidity in terms of liquidity, tapering is also a concern, I think. But as a bottom-up global, as a bottom-up equity house at the Sparx, we always look for a company with a strong balance sheet, and the fundamentals are improving. So hence, higher rates or some tapering risk is a kind of macroeconomic, but we always focus on the single company's fundamentals, so that that's how we can mitigate the risk of tapering or macroeconomics.
Okay, finally then, what is the one big risk that this market is staring at? I mean, we've spoken about all the positives, we've spoken about how the economy is improving, but what do you think is the one element that can derail the markets over the next, say, 6 to 12 months?
Well, one risk might be metals, higher metal pricing, commodity pricing is pushing inflation higher and higher. While this is pushed by the tight capacity of the supply side, this may not be correlated with the strength of the demand. If there is a run of pricing of metals, that could be the risk to the corporate earnings too.
All right, we'll leave it at that. Thank you so much for joining us. So the metal moves can be perhaps a big risk to this market. But let's do one thing. Let's move on now. We have